Something just shifted in the XRP charts and almost nobody is talking about it yet. While most traders are still staring at red candles and wondering if this coin has any fight left in it, one experienced market analyst just did something that should catch your attention. He started buying, not selling, not waiting on the sidelines, buying right here at these depressed levels, while XRP still sits more than 70% below its all-time high. That decision alone raises a question worth sitting with for a moment. Why would someone with years of chart experience choose this exact moment to load up on a coin that's been bleeding for months? The answer isn't gut instinct, it's structure. A very specific, very deliberate pattern has been quietly forming on the weekly chart since late 2024, and it's now reaching the point where patterns like this typically resolve. What happens next may help define XRP's next major move, and by the end of this video, you'll understand exactly what that setup is, why it matters, and what price levels are now the ones to watch. Let's get into it. Right now, the broader crypto market is in a strange spot. Confidence hasn't fully returned, but panic has faded too. Traders are cautious, prices are choppy, and a lot of coins are simply drifting without clear direction. That kind of environment tends to separate patient investors from reactive ones. It's exactly the backdrop where quiet accumulation becomes more interesting than loud headlines. XRP fits that description well. After peaking near $3.66 back in July of last year, the coin has spent months grinding lower, testing patience at every turn. But underneath that decline, something structural has been building, and that structure is what brings us to today's main story. A well-known crypto trader has laid out a case for why XRP may be closer to a major breakout than most people realize. The reasoning isn't based on hope or hype, it's based on a technical formation that has been developing for well over a year. Here's the setup. On the weekly chart, XRP has been carving out what's known as a falling wedge. This pattern began forming during the powerful rally in November of 2024. The lower boundary of the structure sits around $2.10, a level that acted as support during that earlier consolidation phase. From there, price spent months building sideways before the upper boundary of the wedge started taking shape in July 2025, right around the all-time high 25, right around the all-time high. Since that peak, XRP has done something very specific. It's printed a consistent series of lower highs and lower lows. On its own, that sounds bearish, but when you look at how those highs and lows are behaving, the picture changes. The upper and lower boundaries of the pattern have been converging, tightening the price action into a narrower and narrower range. So why does that matter? When price gets squeezed like this, it usually means the market is running out of room to stay indecisive. Buyers and sellers are locked in a tightening battle, and that kind of compression tends to precede a sharp, decisive move. It's not a guarantee of direction on its own, but it's exactly the kind of setup that experienced traders watch closely. Because when the breakout comes, it tends to come fast. That's the technical backdrop behind the analyst's decision to start buying. He isn't guessing that a move is coming. He's positioning ahead of a pattern that has, historically, tended to resolve with real force. Now here's where price action gives that thesis some early support. Just last week, XRP tested the lower boundary of this wedge, and buyers stepped in. The support held. Since then, the start of July has brought a bounce of roughly 6% off those lows, pushing XRP back toward the $1.06 range. That bounce matters. A retest of support that actually holds, followed by upward movement, is often the first sign that a larger move is beginning to take shape. It doesn't confirm a breakout yet, but it tells you the floor is still intact. According to the analyst, if this wedge does resolve to the upside, the next real target sits in the $1.90 to $2.10 range. From current levels, that would represent a move of somewhere between roughly 79 and 98%. That specific price zone isn't random, it has history behind it. During the 2021 bull cycle, XRP peaked almost exactly in this range, topping out near $1.96. Then, after breaking above it during the November 2024 rally and climbing as high as $3.39 in January 2025, XRP pulled back down and built a base in that same $1.90 to $2 zone before eventually pushing on to its current all-time high. In other words, this level has already proven itself twice. Once as resistance that took real effort to break through, and once as support that held long enough to launch the next leg higher. That kind of repeated behavior at the same price zone is exactly what technical traders look for when they're trying to separate a meaningful level from an arbitrary one. That's why reclaiming this region isn't just a nice milestone, it's structurally significant. A confirmed break above the falling wedge, followed by a sustained move through the $1.90 to $2.10 zone, would open the door toward a much larger move beyond it. But price structure isn't the only thing lining up here. There's also a shift happening underneath the surface, in the actual usage of the network. Newly activated addresses on the XRP ledger recently climbed to around 6,000 per day, the highest level seen in roughly 3 months. At the same time, active addresses across the network rose by 36% over just a 2-week stretch. Now, let's connect the dots on why that matters. Rising address activity is often a sign that real usage, not just speculation, is picking up. When more wallets are getting activated and more addresses are transacting, it suggests renewed interest in actually using the network, not just watching the price from the sidelines. There's one more piece worth mentioning. The spread between whale wallets and retail wallets moving XRP off exchanges widened by nearly 25% recently. That means large holders are pulling coins off exchanges at a noticeably faster pace than smaller retail holders. Historically, when bigger wallets move assets into private custody rather than leaving them on exchanges, it tends to reduce the immediately available supply for selling. It doesn't force a price move by itself, but combined with a tightening technical structure, it adds another layer to the picture. Less available supply, rising network activity, and a chart pattern nearing its resolution point are not 3 unrelated observations. They're pieces of the same broader story. So what does this all add up to? A falling wedge that has been compressing for well over a year is now testing its lower boundary and bouncing. That technical setup is being reinforced by rising on-chain activity and accelerating whale accumulation off exchanges. None of these signals guarantee an outcome. Markets don't work that way, and anyone claiming certainty in a chart is overselling their own confidence. But when structure, on-chain behavior, and historical support all start pointing in a similar direction, it becomes a setup worth watching closely rather than dismissing. Zooming out beyond just this one chart, this kind of pattern matters for a bigger reason too. Falling wedges that resolve with strong on-chain support tend to mark turning points where sentiment shifts from exhaustion to renewed interest. If XRP does manage to reclaim that $1.90 to $2.10 zone and hold above it, it wouldn't just be a technical win. It would signal that the accumulation phase many long-term holders have been waiting through is finally starting to pay off. For XRP holders specifically, the level to watch isn't the current price. It's whether that upper wedge boundary breaks with real volume and whether the coin can hold above the historically significant $2 region once it gets there. That combination, a confirmed breakout paired with a successful retest of that zone as new support, is typically what separates a real trend change from a temporary bounce. So here's where things stand. XRP has spent over a year building a tightening pattern that's now approaching its resolution point. Support has held on the most recent test. Network activity is climbing. Whales are quietly reducing exchange supply. And Michael, the analyst behind this thesis, has already made his move, buying into the uncertainty rather than waiting for confirmation that may come too late. Whether this breakout plays out exactly as expected is something only price action will confirm, but the pieces lining up right now are hard to ignore. If you found this breakdown useful, hit like, subscribe for more updates like this, and drop a comment letting me know where you think XRP heads next.